You've got home and auto insurance policies in place, but what about life insurance? If you don't have life insurance yet, you're not alone. Last year, only 54% Americans had some form of life insurance in place. Life insurance is an agreement between you and an insurance provider that, in exchange for your monthly payments, the insurer will pay a sum of money to your loved ones when you die. I know, it is not a fun topic to think about, but focus on this. You buy life insurance not because you're going to die, but because those you love are going to live and you want them to be financially secure after you're gone. So what does life insurance cover? Life insurance can cover your loss of income, funeral expenses, debt, and other financial needs that might come up after you pass away. Once you start that life insurance policy and start paying monthly, what you have really bought is a peace of mind, peace that you're providing financially for your loved ones even after your death. There are two main types of life insurance: term life insurance and permanent life insurance. Term life insurance provides coverage for a specific amount of time. If you die at any time during this period, your beneficiaries will receive the death benefits from the policy. A term life plan is more affordable than a permanent plan because it only lasts for a specific period of time. Permanent life insurance, on the other hand, lasts throughout the entire lifetime. It comes in the form of whole life, universal life, or variable life insurance, each differing slightly from one another. How much does life insurance cost? The cost of life insurance premium will depend on the type you're buying, whether it's term life insurance or permanent. But other things can play a role too, like your age, health, and lifestyle. Let's look at Sarah. She is in her 30s, a non-smoker, in good health, married with one child, and earns $40,000 a year. On average, if she took out a 20-year term life policy with $400,000 in death benefit, she would pay around $18 a month for this plan. If she opted for permanent type of life insurance with death benefits of $125,000, she would pay around $100 a month for it. Other things that insurance providers will look at when they are working out your life insurance premium are age, gender, personal and family medical history, weight, if you smoke, if your lifestyle includes risky hobbies like skydiving, or if you regularly travel to dangerous parts of the world. So now that you know what they're after, how can you reduce your premium? While you can't do much about your age, you can quit smoking, take up regular exercise, and try to lose weight if you need to bring those premiums down. Almost everybody needs life insurance. No matter what stage of life you're at, life insurance make up an important part of your financial security. Here are a few cases where you should absolutely consider getting life insurance. You're going to have a baby or you already have children. If someone relies on your income to live, you need life insurance. The birth of a child is usually a motivator to get life insurance coverage. Most people get life insurance to cover the mortgage, education, and other expenses so that their family can continue after they pass away. If you're planning to have a baby in the next year or so, now is a great time to buy life insurance. To support aging parents financially. Ideally, your parents have already purchased life insurance as part of their retirement planning. However, according to a survey in 2018, about 6.2 million millennials are acting as caregivers for their parents, in-laws, or grandparent. If you're caring for your parents at home, in assisted living, or a nursing facility, life insurance with long-term care rider will help you meet the costs. You have private student loan debt. If your parents co-sign for your private student loans, life insurance means that they won't be left with the debt after you die. Even if your parents weren't co-signers, you don't want the repercussions of having debt left behind to your estate, especially if you're married. If you die, private loans become part of your estate debt. It's at the discretion of the private lender whether to discharge your debt. Your job is high risk. If you work in a dangerous or high-risk environment, you have a greater chance of dying than someone who sits at a desk all day. Jobs in aviation, construction, firefighting, mining, oil and gas, and a few others will almost always result in higher premiums. You have extreme hobbies. If you're a thrill seeker with a liking of extreme sports, you will probably be deemed higher risk by a life insurance company. But it's similar to having a higher risk job. You will pay more to be insured, but the cost is worth it considering the likelihood you'll die from unnatural causes. We cannot control when we will pass away. It could be today, tomorrow, or 50 years from now. But it will happen eventually. No amount of money can ever replace a person. But more than anything, life insurance can provide protection for the uncertainties in life. Without a doubt, having life insurance coverage will bring you and your family peace of mind. It's one thing you can be sure of, and you will no longer have to question whether they'll be taken care of when you're gone. Life insurance protects you and your family from the unknowns and helps them through an otherwise difficult time of loss.